Joining us now with more on the Fed, Krishna, Guha, Evercore ISI Vice Chairman. Good morning, Krishna. The gap between the Fed and the market for year end is kind of closing this morning. It's only at 47 basis points. Is the market starting to see things the Fed's way now?
So I think there are a couple of things going on. The first is that part of that market pricing that used to have a lot of Fed rate cuts by end year was really driven by tail risks. So the tail risks relating to the debt ceiling, tail risks relating to the banking stress. As those tail risks moderate, that in itself pulls down the amount of cuts the Fed is expected to deliver on a probability-weighted basis. I think the other thing that's going on is that people recognize that while the Fed is not likely going to be hiking in June, they will deliver a hawkish pause that holds out at least the possibility that they could come back and hike rates further later in the year.
Krishna, let's talk about the state of play, because a little whipsaw last week. We had a couple folks say they thought we ought to go higher. Bullard was among them. I think you could probably put Bowman in that camp from a week earlier. There was also Lori Logan made me think we could go higher and not pause in June. And then the chairman kind of comes in Friday and says, you know, I think maybe we want to take up. That was my take was take a pause here. What was your take on all the rhetoric last week and what mattered?
Yeah, so you're right, Steve. There was, some confusion around different signals from different Fed officials. But I think the takeaway was pretty clear, even before Powell spoke, that most Fed officials do think it's going to be appropriate to take a pause here, see how the world evolves over a few months before making a call as to whether they need to do anything beyond that. There is a hawkish minority that is, pushing back a little bit against that. I think the rest of the committee is continuing to maintain, a somewhat hawkish tone because they need hawkish air cover for the pause. And what we got from Powell, I think, Friday was a pretty strong implicit signal. If the Fed was preparing to raise rates in June, Powell would have laid the foundations for that in his remarks Friday. He didn't, they're not.
Except that there's still an inflation report to come. Krishna, I have the pleasure of talking to some former hawkish Fed members who think, we could go up near 6%. Where do you stand on that issue of, okay, a hawkish pause in June, but does that mean they're done?
So if the world evolves in line with my forecast, they will be done in June. And, when it comes to the sort of September timeline, where I think it's the appropriate timeline for making that assessment, they'll be able to harden up the idea they don't have more to do. And I actually think they will be cutting rates at the end of the year. But getting back to your original point, 1 quarter point cut in December, I think, is what's really in play, possibly outside of a big tail event. So I do agree with the idea that the market should be shaving back with the amount of rate cuts it's discounting, even though we should not be head faked over near-term rate hikes.
Krishna, we're talking about, just over 6 months to the end of the year at this point. Do you expect that you're going to have a dramatic worsening of the employment picture or some other thing that's going to happen on the financial stability front that's going to cause the Fed to turn toward cuts late this year?
So I think, Neil Kashkari's point on your show earlier on is very well taken, right? If the economy continues to be very resilient, unemployment stays near record lows, if the underlying inflation, particularly the services outside housing, stays sticky, then they won't be cutting this year. In fact, they may not be cutting until some way into next year. My baseline forecast has the economy slowly weakening over the coming months as the lagged effects of the past tightening take hold, and we start to see some genuinely material credit tightening emerging from the bank stress. And my baseline has a mild recession kicking in towards the final months of the year. And I also see the disinflation process over the second half moving a bit faster than the Fed anticipates. That's what can get you a cut.
Krishna, all the Fed officials calling for higher rates are downplaying the banking issue. So tell me what you've planned for each one of your summer weekends coming up. Are you going away, or are you going to be home waiting to see if there's some weekend crisis coming up?
Well, let me put it this way. I'll want to make sure that I have a good internet connection every weekend through the summer. Now, look, I think that there is a reasonable prospect that we are through the acute phase or the turmoil or failure phase of this crisis. But it's not a done deal. It's absolutely not a done deal. And beyond that, I think the key thing really to understand here is that for every one bank that ultimately fails, you'll have 100 banks that are acting more conservatively in the period ahead to make sure they don't end up in that same place. And that's where the macro impact comes from.